Hello, everyone, and welcome to this webinar from LCR on U.S. strategic minerals and our EB-5 project. Our goal today is to give you an initial overview of the business, an understanding of the critical minerals market, a good look at how the business and the project is going to be financed, is being financed, and why it's important to the U.S. government, which can lead to priority processing for EB-5 investors. My name is John Baker, and I'm the Chief Marketing Officer of LCR, and I'll be the moderator today. I'm also going to work to be the voice of the investor, the voice of the client, as we like to say, trying to think through the questions you may ask or are asking yourself. And of course, to keep the conversation flowing through the outline I just said. I've got with me today a great group, the people behind this business. Stacey Hasty, who's the CEO of U.S. Strategic Metals and the owner of Environmental Operations, Inc., which has been involved with the project from the beginning. Alistair Aaron, the CFO, who came from HBS Investment Partners, one of the early investors in this project. Mike Holloman, who's the commercial director, who also worked for Glencore, which is a Swiss business and a Fortune 50 business, and a very important player in this critical minerals industry, or minerals industry in general, and also a business partner of U.S. Strategic Metals. And Sherman Baldwin, the CEO of LCR Capital Partners, who has also worked as part of the U.S. Navy, worked in the Pentagon, and is familiar with how the government executes the executive orders that come out of the presidential office, and why that's relevant to this project. Before we jump in, I'm going to do some quick housekeeping. If you have questions, there's a Q&A button on the webinar software from Zoom. Feel free to enter your questions there. If you enter them early, I'll work them into the conversation, or we'll save time at the end to go back and forth on specific questions. We are recording this event, as you heard when we first started, and we will make that link available to everyone at the close after we finish up, so you can come back and take a look or share it with a friend who's interested in the project. Since we are in a well-regulated financial investment industry, I'll take a minute and read a disclaimer so everyone understands that this marketing presentation and event do not constitute an offer to sell securities. If you're interested in seeing project investment documents, we ask you to contact LCR directly so we can confirm you're an accredited investor, particularly if you're in the United States, or the equivalent in your market. We can then also focus the conversation on your individual or family needs. This presentation also does not constitute legal immigration advice. If you'd like legal advice, you need to form a contractual relationship with a licensed immigration attorney. LCR works with a number of the industry's best attorneys and would be happy to make a referral if desired. And again, that attorney then will give you the immigration advice you need. So, jumping in, U.S. Strategic Metals. Stacey, as I said in the outline, I'd like to start with you to talk a little bit about how the company first formed up. I saw in your bio that you started your career in the early days working in chemical plants installing air filtration systems. I think it was a air filtration technician. You've really worked around industrial sites and mines your whole career. Can you tell me a little bit about what brought you to the Madison mine? Because I understand it was initially part of the environmental cleanup of the old historic lead mine.
Yeah, that is correct. Thanks, John, and like to thank everyone for their time and interest in this project. Stacey Hasty, I have over 31 years of experience in the environmental field, but I think it's important to this conversation to also bring up that I am the fourth generation of a five-generation mining family. My family still owns and operates a mining operation in Southern Illinois and Western Kentucky. I still hold an interest in that operation. I do serve the family in an advisory capacity, and quite frankly, I was the succession plan. Was supposed to be the succession plan for my family after college to come back and run the entire operation, but to my family's dismay, I moved on into the environmental field and remained with them in an advisory capacity. I would say that in our environmental experience, yes, I started out on the ground, learning how to do the basic things of air sampling, water sampling, things of that nature, what we like to call in the business the grunt work. And then, I've done everything from operating heavy equipment on complicated soil contamination projects. I have removed asbestos and all the protective gear. I've done about everything you can do in the environmental industry as a laborer, as a project manager, and now as a project principal and owner. My undergrad is in accounting, so I have a business background, but I have a master's of science in environmental as well, and I use both of those degrees quite a bit every day. Our specialty, and the company has grown through this, is to take on environmental liabilities and figure out a way to create what we call cost certainty, indemnifications, protect a buyer of that property so they do not get hindered with past environmental liabilities. And we have been very successful in that regard. And I would say that we are considered to be one of the top firms in the U.S. when it comes to the industry of environmental risk assumption. And we're pretty proud of that. Give you one specific project that I'm proud of, particularly in my career. In 2014, 2015, I was tapped by the governor of Missouri, Governor Jay Nixon, and the mayor of St. Louis at the time, Mayor Francis Slay, to lead the charge of recruiting or soliciting National Geospatial, the U.S. government, to put their Western headquarters in St. Louis. And it was going to be on 120 acres of highly contaminated property. We were very successful in that regard. It's a 2 or 3 year process and is a $2 billion plus development. And it was a tough competition, but we were very successful in recruiting and convincing them to build their facility with all the job creation on that site on a brownfield environmental contaminated site, when all of our competition was what we call greenfield, pristine property. So that is should tell you, hopefully, our ability when we're dealing with complex, sophisticated U.S. government when it comes to environmental risk assumption and management liability, how good we are at it. So fast forward to 2017, I was contacted by Phil Anschutz with Anschutz Mining. He owned this mine, the former Madison mine that we're talking about now. He was wanting to dispose of that asset because he was getting out of the mining industry, as well as it was the last asset he owned in Missouri. He wanted to move on, and he was having difficulties with the EPA because of Superfund classification of the site, because he was viewed as a deep pocket and did not know how to manage the EPA. So he contacted us because of our experience and our ability to manage environmental risk. And that's how we ended up with this site. And that's how I have circled back around, back into my, let's call it my family roots, and I'm back in the mining business.
Mining and mineral processing. So working with the Environmental Protection Agency, obviously that is a huge step for any industrial site in the U.S., and particularly one that's built on a historic mine. Is that cleanup that's progressed, and you're almost at the last phases? Is that right?
That is correct. We are 99.9% complete with all of the remediation that we coordinated up front with the EPA, that with the Environmental Protection Agency, that would be required for this site.
And more than just the minerals that are in the mining waste and still in the ground, the plant is also quite a big recycling operation. Can you talk a little bit about what brought you to working with Interco and getting sort of recycled electrical vehicle batteries or computer batteries in order to be a source for the processing plant?
Yeah, absolutely. Early on, we began on the project because, as you know, we have the historic tailings spread out all over the 1,800-acre site that we can recover nickel, cobalt, and copper from. But we also have the underground reserve. The initial plan was to just mine that material and process that material on site. So just our material only, no third-party material. But we constructed a pilot plant that has been operating for more than 2.5 years. It's a very sizable pilot plant. And we, through our research and development, our R&D, we realized that there was an opportunity with our technology, not only to process our ore from our property, but also third-party material, most notably recycled lithium-ion batteries, which we refer to as black mass. So I'd like to tell you it was planned that way. It kind of evolved that way, and we're very fortunate that our technology and the actual permitting at our site allows us not only to process our ore, but to process the recycled batteries black mass. So since that became an opportunity for us, we started looking for folks to partner with, what we call black mass specialists. And we came across Interco, who is probably the most sophisticated in the United States at producing black mass, and have been doing it longer than anyone else in the United States. And it just coincidentally, the person who owns Interco is also a long-term friend of mine from St. Louis that I've known for 25 to 30 years. So we're very fortunate in that regard. And not only is the relationship with Interco important and a must for the success of this company, but also, which my column I'm going to get into later probably, is our relationship with Glencore, one of the largest mining trading firms in the world, that they will also provide us third-party feed if we have the capacity and Interco ever falls short of on any given month on providing us much needed black mass feedstock.
And that's critical as a critical mineral. Obviously, in the site, you've got the cobalt, copper, and nickel, but lithium, the only source of lithium for you is through these recycled batteries. Is that correct?
That is correct. So once we moved from just processing our ore into the recycled batteries, the black mass, we found out early on that in order to have a competitive edge, which it is a competitive edge, we need to figure out a way to extract the lithium as well from the black mass. And we can successfully do that with our technology. So fortunately, our technology, which is known as Metalox, is very, very flexible and ended up being very successful at recovering lithium as well, which is a big competitive edge for us, because if they send black mass anywhere else to smelters or whatnot, they are not recovering the lithium, but we can.
Excellent. And of course, I know that there's a huge push in the U.S. to develop the lithium deposits that are here. You also could process, lithium that's embedded with other ground materials to produce the battery grade mineral.
My column will have to speak to that. I'm not sure that we are doing any extraction as relates to with lithium as it relates to ore bodies, but most of our lithium recovery, or all of our lithium recovery thus far, comes from the recycling only.
Okay. Well, I'm going to turn to Mike. I know that you have to drop off, Stacy. I really appreciate you coming in and giving us that background. And, in a lot of ways.
And John, I'll stay on for another 5 to 10 minutes just to listen, see if there's any questions. But thank you.
Okay, fantastic. So Mike, obviously a huge driver of the business is the demand for critical minerals. We've talked a lot about cobalt, nickel, copper, which are both in the ground and in the tailings on the site, and the lithium that can come through the recycling of older batteries. I think everyone understands electric vehicles growth and the expectation for the transition that's going to happen in the industry. We don't need to spend time there, but I believe most of the people on the webinar are probably not familiar with how the critical minerals industry works. And you worked at Glencore for 12 years, I believe, and have worked in and around the business for quite some time. Can you just start at the top level and talk about, how a company like Glencore participates? Because it's much more than just the offtake purchasing contract that they've agreed with USSM.
Yes, just to give a little high level background on these critical minerals, where they come from, what are they, where they come from, It's important to know cobalt, nickel, copper, and lithium, the four main metals that we're working with at Missouri Cobalt, U.S. Strategic Metals. They are the four metals, the most important metals in the energy transition, period. Lithium-ion batteries require massive quantities of these four metals. And in our mine in Missouri, and this is why I stopped being a retired Glencore trader and got back into the commodities business, because this is such an exciting part of the market. I mean, I dealt with Glencore, the largest commodities trader in the world, also that owned mines all around the world. And I watched the different cycles of commodities. There was a period when oil was king. There was a period when coal was king. Now we are in a future. It's this energy transition future, and there's no stopping it, where the battery minerals are going to be king of the commodities market. And one of the real interesting things about it is, for example, oil and coal are well known. Even copper is pretty well known. Nickel, less so. Cobalt, much less so. And lithium as well, because of their quantities. It's almost like orders of magnitude. So just for reference, I'm not sure how much everyone knows about the metals that are on the call, but lithium and cobalt, the global production of both of these metals is under 200,000 tons. Cobalt might reach 200,000 tons this year, will be an all-time high, but nickel is an order of magnitude higher. It's 2.7 million tons is the production of nickel, and copper is again higher than that, an order of magnitude. It's 22 million tons of copper. So a lot of what's going on globally is mining for copper, and you get this byproduct of cobalt. Mining for nickel, and you get this byproduct of cobalt. And lithium, because it hasn't been a metal, that has been globally pursued like it is now, there just haven't been any lithium mines. There's lots of lithium around the world, but people haven't been mining it because the demand hasn't been there. And all of this demand has come in the past 15 to 20 years, super accelerated in the past 5 to 6 years. In fact, for cobalt, just to imagine this, 6 years ago, the battery requirement for cobalt, global cobalt demand, was 15%. So 15% of all the cobalt went into batteries. Now it's 50. It's going to 80% by 2030. So we're looking at this supply and demand change. And in my long career, 14 years with Glencore, 6 years with Gunvor, 26 years in the global commodities trade, I have never seen this big of a change in a transition. This is literally like going from horses to cars. That's how big the energy transition is happening, and how big the demand for these metals are going to be. And a big problem we have is, where do these metals come from? So, cobalt is almost exclusively from the Congo. It's 130,000 tons last year. So 70% of the market came from one country, India, Africa, not the most reliable place in the world, right? Then you have this newcomer in. I'm sorry, John. I'm sorry.
I was going to say it's a difficult place in terms of working conditions, and
exactly. It's also landlocked, no ports. It relies on Durban, and you have to go to South Africa or other places to ship it out. And then, of course, the big elephant in the room is there's only one place really to process it, and that's China. And that's what we're trying to do: disintermediate China by having processing in the U.S. But so you have Congo, Indo, Russia. All three of those are foreign entities of concern. Those are the biggest cobalt producers. For nickel, Indonesia is number one. Russia is number three. Foreign entities of concern is where all the nickel is produced. Now, copper is a little better, Chile, Peru, but the third biggest copper producer, DRC. right? So foreign entity of concern. So you can see this is a recurring theme, that we have to find places where we can get the metal and get it into the U.S. supply chain that aren't foreign entities of concern, who are currently shipping almost 100% of their metals to China for refining, right? So there's a big, there's a big incentive here, business incentive, global macroeconomic strategic incentive for us to have refining capacity, mining capacity, recycling capacity in North America. And that's what we're doing. And frankly, that is what got me back in the business. I was a retired, happy, former commodities trader living in the US. And in 2017, Stacy and Randy Waterfield, our chairman, called me and said, "Hey, Mike, would you be interested in looking at this mine that we have? We're doing a cleanup. It's a super fun site. We're doing a green cleanup. Can you help us do this?" And so I was the first employee they hired to help, get things going. We brought in a crack team from the Congo. We have metallurgists from the biggest cobalt mine in the world. We have their chief metallurgist and their head of processing now work for us in Missouri. So what we did was we built a really good team. We built this concentrator to make a concentrate. And then we started going down the hydrometallurgical route, which is where we are now. And all of this money, time, team building that we put in allowed us to get an offtake contract with Glencore. And the reason that Glencore is so important for the entire story of U.S. Strategic Metals and Missouri Cobalt is that Glencore currently controls 33% of the global cobalt market. With their 2 mines in the Congo and their massive trading operations, they see the flows of the metal better than anyone else in the world. There's not a country that sees as much of the flows as where Glencore sees all of the flows of the cobalt. They also control 15 to 20% of the nickel market, a huge percentage of the copper and lithium market. So we consider Glencore a partner, which they are. We have an offtake contract with them, but we have mutual sales strategy to try and get the best price. And we really think that, having Glencore as not only the company we lean on to help us make sure we're always able to sell our metals, and they're also the company that will always make sure that we have feed. In fact, they are looking at ways to have an option. Right now, they go to the few Europeans that accept cobalt, and they go to China because those are the options. Well, wouldn't it be nice if we had an option in the U.S.? And look, I wouldn't speak for them on a forum, but I can just say I think they're going to backstop us on any feed requirements as soon as we have a lack of feed. Right now, we're fully booked with feed through phase 1 and probably through phase 2. But if we get to a phase, if we get big enough that we need additional feed, Glencore will help us out. They're also strategically interesting for their hedging strategies. And we have an MOU with them that we will collaborate on hedging, which as a miner, at some point you might want to think about understanding where the market is going. We're going to have physical to trade, so we can also do some paper plays, which will not only keep us from downside protection, but also have arbitrage. For me, a trader, I want to have options to take advantage of price discrepancies where we'll know more than anybody else in the market. But that's why I believe Glencore is so important, and that's kind of a high-level overview.
So stepping back, you obviously have a huge surge in demand, as you were saying, 2x in the 5 to 7 years for cobalt, and some people say 5 or 6x for lithium and other pieces. You have a huge sources, so actually the business could scale with additional plants, because you also have a site where, with permitting, you could add additional plants as finance and market demand requires. So, I mean, I have to ask, obviously, one big question that a lot of people have asked, which is, cobalt is right now at around $10 a pound, and, it's been as high as $40 even in early 2022. What's driving that price? And with all of this demand on the horizon, why isn't the price higher right now?
So yeah, this is the question which seems obvious, which everyone in the market is asking. But what everyone needs to remember is we had a 3-year global market shutdown. What happened during COVID? All of the mines, they needed to keep people working. They didn't all shut down immediately. So they built these huge stocks. And as we have come out of COVID, we have not yet debottlenecked this overstock situation. There were huge stocks at the mines. There were big stocks at the ports. No one was shipping anything. No one was accepting anything during COVID. So the pandemic debottlenecking from overstocks are the main reason that prices have not recovered. We're expecting end of next year. I mean, it's still very slow. And you look at the global economies. The global economies have not fully recovered from, the pandemic. There's still these after effects. It's a clunky recovery, and that's what we're seeing. But, all you have to do is look at Bloomberg, NEF, Transition Metals Outlook, the recent update. I mean, the very recent update shows basically hockey stick demand for the transition metals. And cobalt in particular, they're showing a peak demand 2034 of 500,000 metric tons. I ask you, where is the metal going to come from? At 500,000 metric tons, we're at 200,000 now. We're going to be one of the only new mines in the world. We see potential for prices to go way up. And if you look at, and I know you want to ask about IRA, but the average cost in a battery, a Tesla, a Ford, a Goshen, or a BYD, it's about $2,500 per car for the whole battery. Well, with what the US is doing, and it's brilliant as far as incentivizing people to buy EVs, the automakers will be able to easily cover the entire battery cost with the IRA EV tax credit. So this makes them able to produce many more cars, and it allows the price for the metals to go much, much higher without affecting anything for the buyers.
So, I mean, it is good that you brought up the IRA, because that's an example of the US government putting its, if you like, industrial policy behind the industry. And I think the particular thing that we noted in going through that was the requirements of domestic production and it's across all 4 critical minerals. Are they requiring domestic production of lithium as well?
I'm not sure lithium. I think it's nickel and cobalt. Copper is not included as well, but it's the nickel and cobalt in the battery that needs to be of U.S. origin. I think that the lithium quantities may be so small, but we're trying to get lithium included. That's a part of our discussion with the DOE. And right now they say battery components, critical minerals. It's not on the critical minerals list. It should be lithium, but we're very happy with the fact that next year they're starting at 40%, and by 2027 it's 80% of the battery. So that will cover our metals, and it will put us in a unique position of being, we think, the only people in North America that can give the tax credit to Tesla, Ford, GM. We're going to be the only near-term option for these people.
Which of course will be critical for their ability to compete and sell their vehicles. So I do have one question that came in through the Q&A button, which is, with lithium battery technology improving, we talked about lithium primarily coming from the recycling, and I don't know if the original, expectation was a 5-year life of a EV battery, but I think people are seeing those batteries are lasting longer. I mean, is there any concern about not getting feed in terms of recycled batteries?
Well, I have to tell you, we are not expecting any end of life feed until 2028. We're not looking at that at all. That's not in our model. That will all be gravy. Right now, we're dealing with mostly battery scrap. And if you talk to the battery scrap guys, Interco, our partners at Glencore, you know, the battery scrap for gigafactories can be up to 30% of their batteries. So if you imagine this, there's a conveyor belt. You have all of these battery packs. They have to go through a test, and 3 out of every 10 are being rejected and put into scrap. It's a lot of scrap. It will easily cover our first feed requirements. It will easily cover everything up until the moment when we will start seeing this flood of end of life. Right now, there is no end of life market. That's only for car wrecks, for example. You can get a battery that's in a car.
Okay, that makes sense. And and obviously Interco is the firm that actually is working with the battery manufacturers to be able to recycle those batteries back into you guys.
Yes. Interco, in fact, on the 24th of October, they will be opening and commissioning with big fanfare in Missouri the largest black mass factory, which it's actually a factory that not only mechanically shreds lithium-ion batteries and LCO batteries. I mean, this is the other thing, and I know we'll get into our competitors, but we can take all the different types of batteries. So they're going to not only shred, but they'll also calcine and turn it into a black mass, which is perfect for us. They're opening this 225,000 square foot factory that will produce 60,000 tons per year of black mass 1 mile from our mine gate in Fredericktown, Missouri. So there's no illusions about why they built. They built it right next to us to feed us. That's 60,000 tons of guaranteed feed coming from that one factory. It will be the largest, newest factory that is producing black mass in North America.
Nice. Well, and that actually answers a question we had come in as well, which is how long do you expect the feed requirements would last? And clearly that is a major player in the industry making a significant bet and building significant capacity right next to your plant. And a win for Missouri as well, because both of these projects will create quite a lot of jobs. Let's talk quickly about competitors, and I do want to make sure we keep some time open for additional questions that come in, and Alistair and Sherman, I want to speak with you as well. But just quickly, Mike, on competitors, we've seen Jervois. There has been some press about a cobalt mine there that actually closed. Can you or would not close, improper words there. I think it went on hold because of the price and what you were just talking about. Would you consider them to be a primary competitor?
Well, we have NDA signed with Jervois. There's not a lot we can talk about specifically. What you see in the public is that they opened the mine and then closed it because of low cobalt prices. Well, if you think about it, they're in Idaho. They don't have processing. They have a high arsenic product. It's 13% arsenic, 10% cobalt, very high in cobalt. And we look at Idaho in general as a perfect feed source for us. We have been working on multiple samples from Idaho. I won't say who they're from, but they're from the same type of resource that Jervois has. Our technology, our wide mouth Metalox proprietary clean green hydromet technology works very well for the high arsenic material. The options for them are Brazil. They have a plant in Brazil, or us. We believe these are the only two options. So we don't consider them as a competitor. We know them well and like them. We think their material is going to be excellent for the US market, and we really want to be their processor. So we think eventually, our opinion only, that will be the processing solution for Jervois.
Right, because they're only are focused on extraction, and obviously the permitting process and getting the state and local and federal approvals to do processing is significant. So, and they haven't even started down that path if they were to choose to. Let me pivot to Alistair, and let's talk a little bit about the capitalization and the financing of the business. You know, over 235 million has already been invested to date. That's a significant amount of money. So you're well down the path. And the EB-5 project is slated at 200 million for the meteorological plant. That has to be one of the hardest words to ever have to say on a webinar.
Hydromet.
Hydromet is a nice way to shorten it. You know, you've been working on this from the beginning. You came in HBS, where you worked previously, was an early funder. Can you talk just a little bit about, you know, how the funding is going, and for the full 400 million that you're expecting to raise to support the business?
Yeah, sure.
John,
Thanks, John.
Jump in and clarify. Sorry, Alistair, but you said two. Yeah, it's one. The current fund is $100 million to support the hydrometallurgical plant. So just wanted to clarify that. So
no, that's
sorry,
correct, Sean. Yeah.
Go ahead.
Yeah, the EB-5 fund is 100 million, and the EB-5 project is just over 200. Alistair.
Sure. So as you mentioned, right, I joined initially from HPS, and so I've had a unique perspective where I started on the investing side, looked at this project from its infancy when they went to acquire the Madison mine site, and it was really just a remediation play in southeastern Missouri, and then building this into what will become the dominant battery materials processing hub in the US. And so as we think about the capital structure and the capital raise to date, a significant amount was used to build out the company in its infancy, build the initial concentrator, which Mike Coleman referenced, and then also produce a saleable product, which is a mixed metal concentrate. That really allowed for the proof of the concept of the business, the initial business plan. And then also building the company. So then going forward, the way that I would think about the company is there's really three different pillars. There's the environmental, which remains always at the top of our minds because it's extremely important to operate in not only a safe manner, but also in an ethical manner. And then also is the processing, which I'll return to, and then the mining pillar. And so those are kind of the three different elements of the business. And so then when you think about how EB-5 fits into this, the EB-5 capital that was referenced of $100.8 million for this capital raise, it's a ring-fenced project, which is just going towards the hydromet. So all of these other projects and pieces of the business that are critical to us progressing as a company and developing, those are not part of the plan. And so really we're just focused on that 100.8 going towards the metals refinery. And so this is as I mentioned, ring-fence project, tight CapEx budget that is strictly focused on producing a hydrometallurgical facility, which can then produce cobalt, nickel sulfate, lithium carbonate, and a copper cathode. And so that's really what the capital is for. So even though there's a lot of different facets of the business, it's a very focused and targeted capital raise.
Excellent. And the as part of the broader company's funding, you're also working with an investment bank to raise capital out in the institutional markets. Can you give us any update on how that's going in terms of supporting those other pillars you mentioned?
Sure. So since I joined in April of 2021, we've raised over $140 million in the capital markets. I think that's really important and differentiates us in the EB-5 space just because it proves that we do have access to capital markets. There's a variety of institutional investors around this project, whether it's HPS Investment Partners, which manages about $100 billion in assets out of New York, or whether it's Glencore, trades a publicly traded company of 50 billion, in excess of $50 billion, right? So there are very significant players around this. And then we recently partnered with an investment bank out of New York to lead a capital raise. And that was kicked off in late March, early April. And so we have been exclusive with one party for the last 45 to 60 days. And so we're targeting at raising around $200 million through a tiered capital solution. And so we're still in the exclusivity period and can't provide a lot of comments, but I think we're getting towards the end of their diligence process. And we're hoping that we'll be able to provide a really positive update of that funding in the next 2 to 3 weeks. And so it's a really significant momentum. It'll be a transformative process and capital raise for the company. And it's been going very well. And I think the owners are very constructive, the board is. And so we're really excited about that opportunity. And it'll also show and kind of usher in the next phase of the company as we leave the startup phase behind and go more towards an established company.
And that actually means that the entire business plan, including the hydromet processing, is going through due diligence with some of the largest financial players, and from whether it's in the critical minerals industry with Glencore, who've already committed capital, to other capital sources and endowment funds. All those classic institutional investors are reviewing the business right now.
So yes, and I would say we have even more experience because all of those institutional investors hire third parties. So then they hire consulting firms that specialize in mining or processing that then do a very rigorous deep dive. We do have very strong and sophisticated parties that support us as well. Clayco is one of our partners on the construction side, Samuel's Engineering out of Denver. But yes, the level of scrutiny is exhausting, but it's obviously very important because it proves out our business model and shows to the world that we're well on our way to establishing the hydromet and then producing cobalt nickel sulfate in the US.
Yeah, so I think that's why Stacy said, and when we were preparing to come on today, that you really have answered almost every question that can come.
There's always something new, but I think the way I think about it is we're more well prepared for the future questions. There's always a different angle, right? So we're every time we go through a diligence round, we're better and better prepared.
So one question that came from our audience is, what do you expect as the peak revenue? Obviously, the pilot plant was a success. It processed, it produced the minerals that you could sell on the market, but we're really waiting on full production. And so I guess there's two questions to that. When do you expect to enter into production? And number two, what do you expect to be the peak revenues from the business, given the existing CapEx plan?
Sure. So starting with the production question, right, that is largely dependent upon the capital raise. I think as we pivoted to different capital solutions, we've then targeted what is a more transformative restructuring and capital raise instead of what we were initially planning to do. We can't really comment exactly how it's taking shape yet, but we'd say it exceeds our initial expectations, which is great. However, that has taken longer to materialize, which has then pushed production a little bit to the right in terms of in terms of us producing our first cobalt nickel sulfate and lithium carbonate. So we're targeting more of a late Q2, early Q3 of 2024. And again, this is truly just a dependent upon financial solution coming together. The way I would think about it and characterize it is that we have a locked CapEx, locked Gantt chart, and then all we're waiting on is just finalizing the funding. And so we've just been very selective with the number of parties that we've engaged with, how we've thought through this, and then we're picking what we hope to announce as a very sophisticated international partner that has a really deep mining background. And so that's why we're really excited about this potential investor as we've worked to formalize this partnership and then this investment. So hopefully we'll have public updates on that soon.
Right,
go ahead, sorry.
I was just going to say the classic things that can hold up an operation like this: permitting is complete. Resources of the site is complete. The team you have in place. So really, it is just this final the capital piece, and then you can get moving.
Exactly.
Also, the commercial relationships are in place, which is quite incredible, both in and out in terms of feed and in terms of offtake.
Right.
Let me just see. We have another question here. The question is, can you mention a little bit about the capital stack with or without the ejection from the investment bank raise? Well, I guess so currently, obviously, the business is operating. You have raised capital to continue to push forward with construction. We see the construction photos. But I suppose you're not doing a contingency for the capital stack without the investment bank raise because you're quite committed to that and quite down the line.
Right. I mean, the way to think about that is we started off with a pretty wide funnel. This was a true capital markets process where we did in excess of 20 or 30 management meetings, flew out to New York for those in person, met with a variety of different institutional firms. The capital markets reception was very positive. And so where we've ended is where we have this locked arms with really one party they push very hard for exclusivity. We've been exclusive with them since early September as they're progressing their diligence. And so as of now, we feel pretty confident that this is going to materialize, and that's how we position the company. That being said, as far as a contingency plan, it's always important to have that in hand. So look, HPS Investment Partners has already extended 130 million of capital. As I mentioned, they manage about 100 billion. They just raised their 5th fund on the direct lending side, which is in excess of 16 billion. So they have significant dry powder if we needed additional capital to continue forward. They're involved in both the equity and the debt. So they are very constructive on this business long term. Also, Glencore is in the second lien position with 57 million. They are also very constructive, given that the Glencore contract incentivizes the highest price, right? They're paid as a percentage of the top line. So Glencore really views us as their North American play. And so I think while we are very confident and optimistic on the current path forward for the financing, we do have a contingency plan in place for our existing partners if needed.
And that is actually a question that frequently comes up from EB-5 investors because they realize it's retail and it takes time. And there's often concern in a project that the EB-5 capital is critical for it to moving forward. But in this case, actually, you have quite a few sources of capital that you're working with.
And I think that's a really important point, right? Is usually when projects go to the EB-5 market, they're either a greenfield project waiting for EB-5 capital to go forward. And that's really the test for the project. Whereas we've already accessed capital markets, we've raised over 250 million of capital to date. We're doing another significant capital raise, and so that really takes a lot of pressure off of the EB-5 raise. And so obviously, it's much more additive than it is a black and white solution.
Yeah, which we do see that in projects where the project's forward movement is dependent on the EB-5 raise, and that can be worrying to investors. And it's good to know that's not the case here. Let me pivot to Sherman a bit. And there was one question, Sherman, that came up about the structure, and I know you worked a lot on this with Alistair and Stacy and Mike. But just clarifying that the payment of capital to USSM to the NCE is actually in the form of a loan versus equity.
Yes, it's a loan, and typical mezzanine debt structure as we have done in most of our projects before.
And as LCR, I know I do want to talk a bit about how the executive orders and things, and how the government takes seriously when they make policy moves like this. But staying on the fund just briefly, LCR is the sole manager, and can you talk a little bit about what that gives us in terms of our rights and responsibilities to the investors?
Well, we're the general partner of the fund, the sole general partner. We act as a fiduciary for our investors, as always, sitting between our investors and the project. And we are a lender to USSM, and it's structured with a 1% return to the investor. The admin fee is $60,000, and we believe that it's set up in a very straightforward manner. One thing that often comes up is the concept of collateralization of the loan, and the pre-money value of what Mike and Alistair and Stacy have put together is over $700 million, and that's pre-revenue, and revenue is about to start soon. But the point is, there's tremendous value in the proven deposits of the 4 metals that Mike has talked about, the capital expenditure that's already gone into improving the land, and the fact that even if there were to be a worst case distressed scenario, the EB-5 loan of 100 million is probably covered 3 to 4x, at least maybe 5x, by the value of the assets and the land. And the U.S. government's focus on supporting this effort is a very real and tangible asset, as well as many international people have a hard time appreciating the value of the permits, but the permits create a incredible barrier to entry and take a long time. You can do research on any number of oil and gas, natural resource projects in the US, and the lead time is often decades long in terms of the permitting process. So the fact that Stacy and Mike and Alistair have secured all these permits is a very significant competitive advantage that protects this asset and gives it the focus of a Glencore as well as the US government.
So many of our investors obviously are coming from countries where the role of the government in project success or failure is very important. And in this case, we have two executive orders from both of the current administration and the previous administration supporting the growth in the supply chain for critical minerals. I know you worked in the Pentagon, you worked for the Joint Chiefs. Can you just talk a little bit about how a department like the Department of Defense or the Department of Energy, what's their responsibility in reacting to an executive order like that or like those?
Well, our LCR's founder, Suresh Rajan, spent about the first decade of his career on Capitol Hill. I spent the first decade of mine in the U.S. Navy, and as John said, after being a carrier pilot, I worked in the Pentagon for several years. And an executive order is, provides a very specific strategic direction to different cabinet level secretaries. And for example, in the Department of Defense, there are a number of different agencies that will react to that and will look for ways to secure the domestic supply chain for these rare earth and critical minerals. Cobalt, copper, nickel, and lithium are all considered critical minerals. And it's important that the U.S. gain independence from China, and especially given things that China has done recently in terms of threatening the supply of certain important rare earth minerals. So we believe that this project is incredibly tightly aligned to those two presidential executive orders. We believe that the Pentagon, as well as the Department of Energy and the Department of Commerce, are broadly supportive of what the business is doing. And we're right up front, we've sought expedited approval for the project from USCIS, and we're highly confident that we'll get it. If we look back in the EB-5 industry on previous projects that have been approved for expedited approval of the project and expedited adjudication of each investor, no project, in our humble opinion, is anywhere near as tightly aligned to two presidential directives from both Republican and Democratic administrations. So we feel very confident that soon, actually, Klasko, our attorney on the immigration side, and Torres Law on the security side, Klasko is checking with USCIS literally this week, because it's been 60 days since we submitted our project application, checking on expedited approval. So we're knocking on wood, but cautiously optimistic that we'll get that approval shortly.
And that expedited approval would allow the project to be reviewed and approved more quickly, and even individual investors to be reviewed and approved more quickly.
That's certainly what we've requested. We've requested both the project approval and the expedited adjudication of each investor. We need to wait to see how USCIS decides on that, but we're bullish on both.
So we're at the top of the hour, and I know we started a little bit late. So if people will bear with me just to go a couple more minutes, I'd like to take just a second. And Sherman, we've talked about projects in the national interest and what it could do with the EB-5 industry. I know there's industry partners on the call, attorneys and channel partners, people that are working across multiple projects, more than just the investors who are interested in an individual project. Can you talk a little bit about how you sort of see this could help the industry evolve, where EB-5 could go if we, as an industry, pick up this kind of project?
Well, we all have lived through the last decade of EB-5, where there have been very short-term reauthorizations, then a 9-month program lapse, then now a longer-term reauthorization with significant new regulation over the program. And 3 years ago, when we were sitting in the middle of this, Suresh and I said, well, what do we need to do to routinely have an expedited project on our platform? And given both of our backgrounds, we said, let's focus on what's in the US national interest, because that's the surest way to get an expedited approval. And after some research, we felt that one of the best industries to do both job creation and be squarely in the national interest aligned with these 2 presidential directives was rare earth and critical mineral mining, refining, and recycling and processing. So, we went to Goldman Sachs, where we have some very high level relationships. They introduced us to the team at US Strategic Metals as the opportunity they were most excited about. We negotiated over probably a year and a half, both the term sheet and then to the offering documents. It takes a long time to get these offerings to market. And Alistair, Mike, and Stacy, it was all EB-5 was all new to them. And it's a process, as we all know. But now we're in the center of this industry, and we believe that in a few years, when we go back to Capitol Hill and seek reauthorization, that EB-5 will be in a very different place. And if we're raising capital from overseas and investing it in the U.S. national interest at home, we believe the Senate and the House will look very differently upon EB-5, and there'll be opportunities to expand the program, make it a permanent program, and we believe that's going to be great for the industry and great for the country.
Excellent. So just to summarize, thank you, Sherman. That's fantastic. We've kind of talked a bit about the company, where it came from, how it started, its roots in actually environmental cleanup of a historic lead mine, and now pivoting to take advantage of the surge in the demand for the minerals on site and the processing required, domestic processing required. We've gone through the critical minerals market, and Mike, you've done a great job bringing to life a little bit of how that industry works and the importance of some of the partners that USSM has already signed contracts with, which is great to see. And Alistair, the financing of the whole business, as well as the role of the EB-5 project. And last, why it's important, the US government is focused on this, and why having the government as almost a partner in seeing the success of the business is a good thing for the project, to put it mildly. We've gone through most of the questions, and we've been answering them as we go along. We'll work at LCR to look at the others and make sure that we can answer you. And of course, at any time, if you have other questions about the project, please feel free to reach out to your LCR representative or team member or myself or Sherman. Any of us would be happy to answer the questions as they come in. We've done quite a lot of due diligence and have quite a lot of material that we can share and what's also in the PPM. I hope you've enjoyed the webinar. A big thank you to Mike, to Alistair, Stacy, who had to drop off, Sherman, for spending your time here today. The event has been recorded. We also will be sharing that to all of the registrants. And again, look forward to talking more about USSM and seeing the success of the building of a domestic critical minerals industry.